Good evening, ladies and gentlemen. We will be starting shortly. If I could just request everyone to please be seated. row, please do go ahead. फिर आपको वापस आके किसी को देना Good evening, ladies and gentlemen, and a very warm welcome to the 9th SBI Banking and Economics Conclave of 2022. I'm Pavitra Parekh. I will be your host over the next 2 days, and we have lots planned for you. So over the last 8 years, the SBI Banking and Economics Conclave has really carved its place as a boiling pot of new ideas by the biggest names and leaders in the industry. This is a platform for innovative thought, game-changing ideas, and of course, open conversation. Now, a story that we discuss often and one that is very well documented is the dramatic transformation of the banking sector. Over the last few years, and even through a pandemic that shook the world, India's banking sector has not only stood steady, but has grown bounds. And today, many in attendance here at this conclave have been the very leaders that have driven that change. Today, even as India stands out as a bright spot and has outperformed the largest and most advanced economies in the world, we are still face to face with several macro risks. The environment is still shaky and the risk of a recession looms. Now, in that context, the 9th edition of the SBI Banking and Economics Conclave is centered on the theme of the role of banks in evolving and the uncertain macro environment. So over this 2-day conclave, we will look at a whole range of interesting and pressing topics, everything from making India ready for the emerging challenges amidst an evolving global environment to the opportunities in growth, exports, and job creation. We promise you all you're going to be very engaged, you're going to be well entertained. And just a quick note, should you choose to share any part of this conclave on social media, may I please request that you do use the hashtag SBI Conclave. Now, to get the ball rolling on this event, let me first invite the chief host and the man heading India's largest bank, Mr. Dinesh Khara, Chairman of State Bank of India, for a welcome address. Please put your hands together.
Thank you, and good evening to all of you. Well, of course, when it comes to the Banking and Economic Conclave, it is one of the major events which we have been celebrating, and we all welcome you all to this 9th such event, which invariably is an event where we capture the thought process and also we also align ourselves to some of the latest emerging themes, which perhaps is the need of the hour for all of us to deliberate and come together with some thought process. This is very different in its very nature, and I think when it comes to our ability to gather such kind of a talent which can contribute in addressing some of the pressing issues for the economy, nothing could be. It actually gives us enough insight into what we need to really think through. So once again, I welcome you all to the 9th such event, and also look forward for contribution from all of you. This, of course, as I mentioned, it's one of the flagship event, and I think one of its kind in the industry. Of course, we were looking forward for the address from Honorable Finance Minister, but unfortunately, due to some pressing reasons, she has conveyed a message that she is unable to make it. We have carved out some kind of a thought process in the sense that we are trying to create a body of knowledge that provide enough actionable roadmap to the contemporary problems facing the country. Therefore, the conclave strives to bring in the diverse viewpoints, national and international both, to deliberate under the overarching theme of the conclave every year. COVID-19 pandemic, of course, led to a whole lot of supply chain disruptions. Geopolitical tension was immediate fallout of that. A lot has actually happened in the last 2 years. The country has weathered these turbulent times well and is emerging resilient and is all set to regain the lost ground. I recall last year's SBI Banking and Economic Conclave, which was centered around the theme of the pandemic and the theme which we had picked up that point of time, the contour of the economic recovery in the post-COVID world. The choice was natural at the material point of time because we had just come out of the pandemic. thanks to the massive vaccination drive which took place in the country. And also the economy also opened up. What will happen and how we design our future course was one of the topmost thought which was there in the mind of many. Now, of course, we have come to a situation. It was followed by a call for Atmanirbhar Bharat, and we are still on that course, but with the additional objective to concentrate our energies to meet the objective during the Amrit Kal. Honorable Prime Minister has described the goal of Amrit Kal to ascend to the greater heights of prosperity for India and her citizens. The goal of the Amrit Kal is to create an India where the level of development is not dividing the village and the city, where there is minimal government interference in the lives of the citizen, and where there is a state-of-art infrastructure in place. To summarize, the economic strategy for Amrit Kal for the next 25 years will be infrastructure-led growth, propelled by the ambitious PM Gati Shakti, National Infrastructure Pipeline, National Logistic Plan which has been introduced, and National Monetization Pipeline. The number is actually quite big when it comes to the kind of investment which is expected to come in for the National Infrastructure Pipeline, as high as about 111 trillion Indian rupees. This is expected to generate huge demand for local manufacturing and MSME. Technology will be one of the major force multiplier in improving the efficiency, widening the reach of markets and lowering the cost will be one of the major focus area for an economy like us. I think as I read the situation, though as of now, it looks like to be a mammoth task. But if we really look back and see how fast the India economy has evolved, the first trillion came in about 50 years. And thereafter, we are adding another trillion almost every 7th year. Yeah. Every fifth year we are added. But the way situation stands in the Amrit Kal, the year 2047, we are expected to be a 40 trillion economy. From 3.3 trillion to 40 trillion, we are expected to go up by about 11 times. As of now, it looks to be a real mammoth task. But perhaps the kind of focus which we are seeing today in terms of infrastructure, we have not seen in the past. And we are all aware that when it comes to infrastructure-led growth, infrastructure growth has always been the debt-led growth. And unfortunately, we don't have the debt market as of now. But there is no iota of doubt that Amrit Kal will require huge mobilization of the financial resources in the backdrop of high interest rate and input price inflation. Banks and domestic capital markets, including offshore markets as well as the GIFT City, will have to play a very significant role. Keeping this in mind, this year we have decided to keep the theme of the conclave, role of banks in evolving and uncertain macroeconomic environment. Role of banks in meeting the objective of the Amrit Kal probably needs no further elaboration. We have to gather all those savings and we have to ensure the deployment of those resources into the core sector where we need to put the money. As usual, the conclave will be spread over the next 2 days, starting today. Coming to today's proceedings, we have a session which is essentially the inaugural CEO panel discussion on the building blocks towards Amrit Kal, followed by the keynote address by Shri Amitabh Kantji, the G20 Sherpa, it becomes all the more important that this year we have assumed the leadership for G20. So in that context, what all can really happen would be really enlightening for us to listen to Mr. Amitabh Kanji. Would be ending the day one of our conclave by a special address by the renowned motivational speaker, Shri Gaur Gopal Das, because naturally when we are aspiring to take a big leapfrog, we need to have very high motivation too. So that's why we thought that let us blend it with that talk as well. And also, I hope that you will find this topic to be riveting, immersive, and informative. I once again take this opportunity to welcome you all and hope you enjoy the evening today and the day tomorrow. Thank you very much. All the very best.
All right, thank you, Mr. Khara. You've definitely set the ball rolling for this event. And like you said, we have a CEO panel to start off with, so let me introduce that. As we here in India find ourselves in a bright spot, having come out of the pandemic and back on the growth track, the focus is now on building the future, on envisaging and creating a stronger tomorrow on a steady base. As the Prime Minister gave a clarion call for a resurgent India during the Amrit Kal of the next 25 years, it became evident by the time that India turns 100, it would leapfrog to the league of mid-income countries, leveraging synergies from opportunities spanning industry, seamless thrust on services, deep and vibrant financial markets, export competitiveness, technological prowess, and of course their interplay. Now, in this context, we have our first panel discussion centered on building blocks towards Amrit Kal. Let me invite some of the top minds from across the industry to discuss this very interesting topic. We have Mr. Gurpreet Chatwal, Managing Director at CRISIL Ratings, Mr. Sheshagri Rao, Joint MD and Group CFO at GSW Steel, Mr. R. Shankar Raman, CFO at L&T, Jitendra Gupta, Founder and CEO at Jupiter, Navneet Kumar Saraf, CEO at Technocraft and President at YPO, Mr. Dinesh Khara, Chairman at SBI, and the moderator for the session, Ms. Shireen Bhan, Managing Editor at CNBC TV 18. Shireen, it's all yours.
Well, this is what it's called a do-over, so I'm going to do this all over again so that everyone can hear me. Good evening, ladies and gentlemen, and thank you very much for joining us here. As I pointed out, this is the 9th event that I've done at the State Bank of India Banking Conclave, so it is a privilege to be back again with some very eminent CEOs to talk about the road ahead for the Indian economy. As Mr. Khara was pointing out, you talk to anybody at this point in time, whether it's multilateral agencies, people in government, foreign CEOs, domestic CEOs, I think there is consensus that India is relatively better poised today. Of course, we are living in volatile times. There is a fair amount of turbulence. There is, of course, uncertainty on where we are going to be headed as far as rates are concerned, what is going to happen on geopolitics. But within that milieu, India is resilient and India is doing better in comparison to a lot of the other developed economies. But the question, though, is that for this to be India's decade, do we have the building blocks in place? And if we do, what else needs to be done? Where do we need to accelerate momentum? Where do we need to intervene? What kind of urgent action is required to be able to ensure that we can actually capitalize on this opportunity? So without further ado, let me get started with our CEOs today to draw out that action agenda for change. And I am going to start with you, Mr. Khara, because you are, in a sense, the pulse checker of the Indian economy. So let me get a sense from you. I mean, it's been a stellar FY23 for the banking sector, and I'm glad that the theme this year is on what banks can actually do to further accelerate growth. But is this going to be sustainable? Is this replicable? Are you starting to see some signs of nervousness coming in as far as the economy is concerned? Credit offtake has been strong. Do you expect that to continue? Net interest margins, pressure expected given the fact that rates are moving higher? An outlook really as far as the mood is concerned.
Thank you, Shireen. Well, of course, when it comes to banking system, it is proxy to the real economy too. So when I say it's proxy to the real economy, how strong the economy is, that will get reflected in the banking system as well. So as you rightly mentioned that, in the current financial year, probably India stands as the most shining star across the globe. And accordingly, it has got replicated into the performance of the banking system as well. So I think the way I look at the scenario is that you talked about whether it is sustainable or otherwise. To my mind, so long as the risk is understood well, the risk is priced well, I think there is no challenge to the system. And I think the learning which we have from the past decade, when the last infrastructure story got unbounded and a lot of growth happened in the power plants and stuff like that. That was a point of time when perhaps the equity was nothing but the hybrid debt. So I think to that extent there is a learning which has been incorporated well by the system. And today it's not merely the equity, but the color of the equity is looked into while the lending is being done. So that's one of the important component. And second very important component is last time when the whole system went through a meltdown was a point of time when corporates were already highly leveraged. This year when we are seeing the growth story, corporates had almost deleveraged themselves. So I think that is the other very important component that gives us a confidence that perhaps the path which we have started treading is probably maintainable. The third important component is from the ecosystem. Last time when all this happened, the social infrastructure in terms of insolvency courts were not in existence. Losing the control of an enterprise was more of a fiction. Today it has become a reality. So I think that has brought in the required discipline on the part of the corporates. The ecosystem in terms of bureau, ecosystem in terms of the strengthening of the other infrastructure relating to ratings, etc. That has actually given us the confidence. Even GSTN and such kind of infrastructure has given us the credible data to evaluate the risk better. So I think I would say that from the infrastructure point of view, the banking system is much better placed. They have got the benefit of leveraging all these ecosystem partners and arriving at more scientific decisions. and they can assess the risk much better. They're better equipped in terms of capital. So I think all this put together, it gives me an impression that today the banking system is much better placed, and probably the kind of growth which we are seeing is sustainable too.
Well, that's good to hear, and I thank you very much for very comprehensively setting out the context of what is different this time around. And you're right in pointing out that, you know, to quote the former Chief Economic Advisor, Arvind Subramaniam's caution around the issue of the twin deficits, and those have been significantly improved, both as far as the banks are concerned, as well as corporate balance sheets, both looking a lot healthier this time around, as you point out. But Mr. Khara, given the fact that you actually have the banking sector that's willing to lend, and you have corporate balance sheets that are looking a lot healthier, the finance minister at a forum like this exhorting once again industry that why aren't you going out there and investing? What's wrong with Indian industry? Where is the risk appetite? Where are your animal spirits? Are you seeing any change in that? And why do you believe we're not at this point in time seeing an unleashing of the animal spirit, so to speak?
No, we are already seeing a fairly good pipeline of the proposals. It is, I can probably share the number with all of you here. It is as strong as about 2.5 trillion with State Bank of India itself. And also, let me share with you, last year we had seen almost about the proposals, in fact, the fresh investment coming in about 20 trillion. This year it is already about 12 trillion. So that is a very clear reflection that people have faith in the demand in the economy. I think that is something which is most important. And I would say that if at all there is a demand in the economy, perhaps the corporates are willing to invest, corporates are willing to come with the infrastructure, and also the capacity creation too. And the second important component is the capacity utilization has improved to about 75%. So that's a very clear reflection that corporates are there to really take the opportunity to their fold and see to it that they contribute meaningfully. So I think I would say that, and last year also we saw about 70% of the fresh investment coming in from the private corporate sector. This year also it is as high as about 68 to 70%. So I think these are the numbers which gives me the confidence, and what I mentioned in terms of the pipeline which is there with the bank. So that very clearly is actually a reflection of the kind of mood which is there in the economy as far as the fresh investments and development of the credit is concerned.
Okay, so the mood is looking strong. Mr. Shankar Raman, you're the other gentleman on this panel with a check on the mood as far as the economy is concerned, and animal spirits as well. So let me get a sense from you. Mr. Khara was talking about demand visibility and how that continues to hold, and it's looking strong. Utilization rates, depending on which sector you operate in, between 65 to 70, or as he pointed out, 75%. What's the sense that you're getting? The government continues to front load as far as CapEx is concerned, and as part of the pre-budget consultation process that's underway, that's the number one ask from industries, that the government must continue to do the heavy lifting when it comes to CapEx. What are you seeing on the ground at this point?
I think...
Okay.
Thank you, Shireen, and thank you everybody for having me here. I think India is in a unique place. I do not know whether it is providence or whether it is planning or it is a combination. We went through the turmoils of the last 2.5 years rather well. And what that has done to us when we sit in the boardroom and keep debating about what next, what it has done to us is given us a sense of self-belief that the country, its ecosystem, and given all the challenges that we face, sometimes I do think that the fact that we are always asked as a country, as people, to do more with less, because we're always resource-starved economy, resource-starved system. So the accent is always to see how best you can extract. You can't help some amount of trickstering happening in this, but setting that aside, the fact is all of us think that India is in good position to dream about its aspirations for the next 20 years or 25 years. To that extent, I think the name Amritkal is so very fitting, that it does indicate how we feel about India. There are a lot of things going for India at this moment. Obviously, I think There's a very aspiring population which wants to make a difference to its own living standards, etc. And a government which is very keen that the growth should be inclusive. And I think Mr. Kara made a point in this opening remark about the divide between village and cities. I think if I look at 3-4 cornerstones of our plan, inclusivity comes to my mind very strongly, because I think all that the government is talking about is to get more people on the train, to make sure that all productive resources are deployed. I mean, I could even think in terms of the goals that we have internally as an organization to get more women included into the workforce, because 50% of India cannot operate at sub-productive level, given the fact that they are as intelligent and as resourceful as people. So given this, I think inclusivity is going to be one reason why all corporates feel that the time ahead is favorable. The second most important thing is also the fact that we are looking at productivity. I think most of the investments, when we came out of the pandemic, even through the phase of the pandemic, all that we were focusing on what to invest in to make ourselves more productive. Because obviously the resources were getting scattered, so we had to get our machines to do more than what people could do originally. And all of that led to IoT, and thankfully the technology never slowed down in this phase. And we were able to exploit the technology to make the machines produce more. So productivity was another key factor. The third important factor, according to me, is sustainability. I think thanks to this disruption that has happened in the world in the last 3, 4, 5 years, we are now beginning to look at every initiative as, will this last the mile? Is capital allocation going to be faulted for betting on the wrong horse? A lot of thought actually goes into it. And today our board is demanding scenarios rather than just going with the management's enthusiasm to put capital to work. So what if it goes wrong? What if this doesn't play out? Becomes a very more natural way to evaluate proposals today. And lastly, I think the government's thrust on infrastructure, building and investment is music to our ears. As a representative of a company which thrives on infrastructure building out, we think that we are in for a period where investment in the core infrastructure, be it transportation, healthcare, be it in terms of public spaces, utilities, water, power. I think India is so underserviced as an economy, and it is at the other end of its aspiration, that unless we provide a bridge between the aspiration and the enablers, India is not going to get its targets right. And I think the government does realize this. So that is another reason why we feel as a company that if this is the kind of stress that's going to be placed on these kind of levers, then I think India and Indian industry should do well. Just on the point of animal spirits, I think it's very nice of the government to stand up and sort of goad our spirits. But they must realize that we are coming off a period of 4 years, 2 years of pandemic, and 2 years prior to that, the economic growth had actually weakened. And as Mr. Kara was saying, the balance sheets were damaged. So consequently, I think a lot of focus was getting the act together, getting the house in order. I think now that largely that has been achieved, maybe the minister, finance minister, could possibly see demonstration of the optimism coming through in plans.
Well, that's good to hear, and I'm sure that that'll be music to the ears of the finance minister. But you know, Mr. Chakraraman, let me just ask you a quick follow-up, and I do want to shamelessly plug an initiative of ours, since you brought up the issue of inclusivity and gender parity, because on the 25th of November, we're launching a mega campaign called the Future Female Forward campaign, which is exactly on this, is to try and ensure that we have more women in the workforce, and we address the cause and not the result side of the picture. Why are women not joining the workforce? So I'm glad that you brought that up. But I also want to understand, as far as demand visibility is concerned, you said that this is a good time for the government to go out there and break this vicious cycle of under-investing in infrastructure, which has been a process and a journey that the government has been on over the last few years. What's the order book looking like? And given the risks that we see in the global environment, how significantly is that likely to impact the global order book?
See, I think the fact is, we have headwinds all around. I think we can't overlook that point. I mean, what could go wrong? We don't know how the escalating geopolitics, where it is going to take us to. There are a lot of conversation around recession and the extent of recession. We do not know how that is going to play out. We also don't know the impact of runaway inflation. If some of these things were to consistently play out for some more time, inflation is going to become a conversation in the boardrooms when we sit and decide on plans. And now, given these kind of headwinds, I think what we would like possibly to do is to play to the strengths. I think the fact that India has demographic advantage is something that we should not overlook. Almost a third of the population coming into the workforce is coming from India. If you project over to 2050, I think the period between now and 2050 is the period where we will have workforce in their early 30s, mid 30s, and that's prime. And I think that's something that we need to exploit. Secondly, I think we are blessed with innate engineering and digital skills. And this is something that we find it very, very happy situation to be in, because I think the IITs, the strategy firms, the Wall Street, and all of that are taken away the IIT ends. So we have to look at the next level of next rung of colleges and universities. And when we go deeper into the Indian universities, we find that the skill level is definitely something that we need to take heart from, because I think what they lack is opportunities. If those opportunities can be provided and using technology to provide that, then that becomes another big factor. So to my mind, I think if we don't make policy errors, if we are able to make sure that the investment plans or project plans, I'll talk about project because that's where I'm more intimately connected with, and that's what is going to reflect in our order book end of the day. So when I look at project plans, I think a lot of sponsors are wanting pre-clearances. I think the clearances as we go along in the project actually is a big risk that we need to deal with. So the extent to which you can pre-clear some of these risks and enable the projects, I think the capital will find its way much faster and smoother. The third thing that we need to actually worry about and also talk to government is optimal risk sharing. When you have these contracts and projects, particularly in partnership with government or any of the agencies of the government, there is certain amount of disproportionate distribution of risk. I think the belief that private capital can court larger risk is, I think, a misplaced belief. We need to make sure that in all these partnerships, partnership in its true sense means holding hands right through, and not just leading the horse to the pond and watching the fun. So to that extent, I think the system has to evolve, be it the bureaucracy that drives all this implementation, or even the thought leaders in the government needs to own up the risks as well, and not just talk about what can be done, also has to enable. The fourth thing that we need to do is, in all projects implementation contracts, disputes are bound to happen. The pace at which we are resolving disputes is leaving a lot to be desired. I think we've repeatedly come across situations where the sanctity of the written contract get questioned. And if you're going to sit across with a counterparty who's more powerful than you are and get into conciliation, the conciliation can go only one way. And that would mean loss of value for private capital. And if that is going to happen, the banks are going to get worried who have funded the projects. The equity investors are going to get worried. So consequently, I think there has to be a sense of responsibility when it comes to project sponsoring. And that is something that we'll have to learn. Now, if some of these things we do well, I think growth in order book is not going to be a constraint. Our ability to build skilled workforce, our ability to automate our processes, be able to deliver on ground is what will drive the order book finance.
Well, you've put three very important action points on the agenda, on the table in terms of what needs to be done to ensure that we can accelerate on the growth momentum that you speak of. Every such conference, every budget consultation, we keep coming back to pretty much the same issues: dispute resolution, faster dispute resolution. I cannot remember, the last time that I haven't heard a CEO bring up this issue. But Mr. Rao, we were talking about policy intervention, and one intervention that the government made in the month of May was bringing in the export duty on the steel sector. And of course, there were other changes as well. Industry had no choice but to accept it, but that has now been reversed. But given the global environment and given where global prices are and domestic prices are, will it materially change things in the short term? And more importantly now, as we're looking at demand visibility, Mr. Khara and both Mr. Shankaraman talking about the infrastructure build out, what are you pegging as far as demand visibility is concerned, not in the near term, but over this decade, if this is going to be India's decade, so to speak?
So good afternoon. Thanks for inviting me. Number one, when finance minister was asking in various forums why private sector is not investing, when so many reforms have been done, so many building blocks have been built over the last 70 years, 75 years, and there is nothing which private sector can ask for, because the tax side, there are so many benefits that have been extended. But if you see last 3 years, even though demand is there, supply side there were so many constraints. Either you call logistics constraints or the supply side constraints. We were not able to produce in many industries. Demand was high, but supply was not there. That's why inflation cropped up in several sectors. But it is the first time where we are seeing that the capacity utilization in the manufacturing sector, it is a 3-year high. It is almost 75%. That is why company by company, sector by sector in the private sector, today is announcing that they would like to commit capex, or they are in the process of implementing various projects to meet the ongoing demand. If you look at the commentary in the last at least few months, it is completely changed. Earlier, whether the growth in India as far as GDP growth is concerned, we will continue to do at 5 to 6%. Today it is not. We are going to reduce our GDP growth, but whether we will grow at 6% or 7% or 8%, that is the story which everybody is talking about. But one important point, when manufacturing sector is creating capacities in India, it is not only to meet domestic demand, it is also for export markets. If our merchandise exports is over $400 billion, our service exports are $250 billion or $250 billion. So $650 billion are intended for export markets, where today global economy is slowing down. Everybody is talking about inflation to recession. Interest rates are going up. The situation is not dramatically going to change in the next few months. It will take some time. So when $700 billion of Indian economy is dependent upon global economy, then we say we will grow at the rate of 7 to 8%, at least in the medium term or in the short term. That may be a little optimistic in my view, because it is very important global economy also will recover if we have to accelerate our growth. But what is comforting to us, when everybody is talking about recession, as far as India is concerned, we are growing at a rate of 6%, and only debate is with 7% or 6%. That is the whole debate is happening. To answer our question, when export duty was imposed, as government clarified or industry has clarified several times, that was intended only to contain inflation. So inflation has come down, duty was removed. But the point remains is whatever capacities that have been created in India, particularly steel sector, if I look at it, 154 million ton of installed capacity has been created in India, which was 15 million ton in the year 1990. So there is a lot of capacity which has come in. Out of that, in the last year, 2022 March, India exported 19 million tons of steel from India. And at the same time, engineering exports have grown so high in the last year. It is $112 billion of engineering exports. It is steel intensive exports. So when these exports are got affected, notwithstanding demand growth is there in India, is it possible to continue to create capacities until global economy recovers? May not be possible, because we are creating capacity here because we are competitive. That is why we are creating capacities in India to meet domestic demand and also the global markets. So at the same time, what is really interesting here, in the year March 22 financial year, India consumed 106 million ton of steel. Whereas in this year, the growth is 11%. That means our demand will be 115 million tons. 9 million ton more growth. Can anybody say India is not growing? India doesn't have potential? Impossible. Similarly, if I look at next 25 years, the kind of investments that are required in India, building our country, huge amount of cement, huge amount of steel, huge amount of metals required. So demand growth continues to be robust. But what is impacting today, 20 million tons of steel which was exported, it becomes half or less than half. There is 8-9 million tons of steel is getting exported in this year. Whereas our imports are growing, exports are coming down, domestic demand is growing but not able to absorb fully. That is the situation today. This may be true in several sectors, not only steel. But the point remains here is, if I look at next 25 years, taking into account the building blocks that have been created by the government through various reforms, starting from 1990, which started with industrial licensing reforms, import relaxations, connectivity reforms, which they have done, national highway building, telecom, connectivity, all this which they have done, even that has not given enough momentum for growth in India. What has given the momentum, as Mr. Shankar Raman rightly pointed out, is to meet inclusive growth, basic needs of the society, to reduce inequality. That is what really this government has addressed in the last few years. Inclusive growth is the main focus. 2013 or 14 onwards, the kind of reforms which has been done, housing for all, electricity for all, gas for all, Ayushman Bharat. If you look at all these welfare schemes which have been announced by Government of India to reduce this inequality, and we'll be able to build on the blocks of reforms that have been done by Government of India, we'll be able to accelerate. Similarly, the kind of reforms with regard to basic reforms or fundamental reforms, either GST, IBC, Gati Shakti, which is talked about, these are all great reforms. In fact, the manufacturing sector, what is there to complain? The tax rate is today is 25%. If any new manufacturing company, if it has started investments in the last few years and completing in the next few years, then it is 17%. So therefore, there are very good building blocks for accelerating investments in manufacturing sector. In my view, manufacturing sector has a great future to meet our domestic demand and also to meet global demand. But the fundamental core, we should not forget, aligning India's strategy with what is happening globally. Those two themes are sustainability, which Mr. Shankar Raman pointed out.
Yeah.
So there we are looking to the government only to look at in the budget, is that if we want to export today, any of the merchandise exports, it is very essential that our carbon emissions are lower. So carbon trading is very important as far as India is concerned. So in that regard, if something can be done, then we will become very competitive while exporting many of the merchandise products from India.
Well, all I can say is that, our reporters who pound the pavement practically every day suggest that this budget is going to have a green focus, is what we're given to understand. So let's see how much of that is translated into some of the recommendations that you spoke of. But, you said, Mr. Sheshagiri Rao, that the manufacturing sector today has nothing to complain about, and the road is really set for growth and for building out capacity over the next 25 years. One specific recommendation that's come in from industry is that, look, this 15% concessional tax rate, which was extended to 2024, should now be given a 5-year extension. So that gives foreign investors, domestic investors, a very clear roadmap, especially in the context of people looking at finding an alternative manufacturing destination outside of China. Do you believe that that is a legitimate ask at this point in time? And also, you were talking about reforms. I want to understand from you, the PLI scheme for the specialty steel sector has been rolled out. I believe 79 applications have come into the government. But given the domestic demand situation as well as global demand at this point in time, do you believe that fresh capacity is likely to be added soon enough?
So to answer your second question, PLI, production linked incentive for specialty steel, it is not creating a basic steel capacity. So whatever imports we are doing of specialty steel, like electrical steel, which we are importing 100% into India. Similarly, something related to API grade steel or automotive steel, where we are importing, PLI scheme is getting extended only to the specialty steel. That means basic steel making already exists in India.
Right.
We need to go into high-end value-added steel. For that, PLI scheme is introduced. 79 applications have gone itself is showing that there is a lot of interest in setting up those capacities in India to stop the imports and also to enable Indian steel industry to export, as far as that particular point is concerned. Second one, you...
On the concessional tax
Yeah.
rate being extended by another 5 years.
So in fact, this concession of 15% was given in the year 2019.
Yeah.
And they said by 2023, whatever investments that are made, those investments should be completed and it should be commissioned. Whereas at the request of the industry, it has been extended by 1 more year.
Correct.
But because of this offshoring and also China plus one policy, if it is extended, it will be great. It is a welcome step.
Yes, so well, let's see whether that consideration is taken up by the finance minister. Now, Mr. Chatwal, let me ask you, what's happening in the bond market? Bond issuance is telling you that risk appetite is on the cusp of being unleashed at this point in time. What's the sense that you get?
No, thank you. Thank you for inviting me, Shireen. Yeah, bond market, I think, has been a bit of a challenge over the last 18 months. And this happens typically I mean, this is bond market and we have a lot of bankers here. So I think it's a trade-off. Usually when the interest rates are going up, the banks are cheaper, so there are less bonds. But the other way around, when that happens, the bond markets pick up. So I think we are, over the next 6-8 months, coming to a situation where we will we will see interest rates peaking out and coming up. But I think it's a collaborative partnership with the bond markets. Really over the last few years have matured significantly in terms of the investors who are coming in terms of the quality of paper which is coming into the bond market. I think we are with the whole this whole infrastructure financing. While today banks are doing the heavy lifting, but we today are creating building blocks within the bond market for that growth. The REIT the regulation, I think, was a tepid one when it initially came in. People didn't want to kind of the first to happen, and then it was silent for a long period of time. But today, when you look at how the infrastructure is being built up in the country, I think REIT and which is possibly the best thing which has happened to the country. You could, while I understand what Mr. Shankaraman was talking about, the headwinds in contract, etc. But I think from what we've seen 10 years back or 15 years back, when we saw the infrastructure build up with all these BOT projects and huge amount of losses and projects coming down, I think today what we are seeing is a much cleaner build out. By and large, and I will step back from what Mr. Shankaraman said. By and large, the contracts are fairer. We have some of these tested in a court of law where at least you have some judgment comes in, at least the cash flow starts. We have a situation where vehicles like REIT and which kind of, I mean, Mr. Khara said that it's a largely debt-funded investment. The moment you put into a REIT and it automatically comes to 50-50. So, and you have a retail participation, which is picking up. Obviously, initially it wasn't there. So I think that regulation per se personally think I would really revolutionize that, and the bond market will have a role to play there. Some of the areas we think it is something which we like to see develop on that is the secondary market liquidity. Today, I think we are having a challenge in the bond market that the liquidity in the secondary market is not enough. We had government talking about a credit guarantee corporation. Like today, when you have shocks, we have the government of India coming in and doing repos and kind of, but on the corporate bond side, we don't have anything. While I don't want to get into the legality of it, but we had a large mutual fund having problems with credit funds. But in the end, every single paisa got paid. And most of the ratings there were A and AA. I think what we are seeing today in terms of the quality of ratings we are seeing in the A, AA, today are far superior than they were 20 years back. So I think all of that, and the fact that we have international investors coming in, many of the REITs and which are owned by pension funds, and those, all of them are putting in money. The governance levels are very different. Yeah. So I think a healthy time for the bond market.
Healthy time, but you know, on the issue of financing, and I want to pick up on what we heard from Mr. Shankaraman as well as from Mr. Rao and Mr. Khara. And given the needs of capital, given the fact that we want this sort of large infrastructure build out, etc., Mr. Chatwal, what is the kind of unlocking of pools of capital that will really be required to get to this aspirational number that we're talking about, and what kind of financing instruments, especially when we talk about sustainable financing, we talk about climate financing, etc. Renewable is a big aspirational target that's been set by the government, etc. I mean, pools of capital, where do we find them?
So if you frankly ask me, I think there's a decent pool of capital which is coming through India. I think when you have, I think as an economy, we are moving away over some of the hurdles. I mean, for example, we said contract resolution, retrospective taxes. I think some of those we've set right. People abroad have different risk spectrum. I think they take those calls. Today, I mean, I sometimes say that Canadian pension funds today are more bullish on Indian infrastructure than many of us are personally. I think the kind of money they're putting in. So I think it's the different risk spectrum of people coming in. But the fact that we are setting things right, we're setting a sustainable growth in infrastructure. We are coming to a situation where the bank NPAs today, by the end of the year, will be 5. And if NARCL, all of that kind of gets resolved, it'll probably be 4, which are historical numbers. So I think we have a pretty clean balance sheets, the corporate balance sheets, if you see today. 5 years back, for the 7,000 companies we rated at CRISIL, the gearing was about 1.1 thereabout. Today, the last half year we looked at it, it was less than 0.5. People have the ability to grow. What I'm trying to say is that with the way and the way we grow, and I understand that people want to grow faster, but I think we are doing the right things. The insolvency law, I think we saw very high ticket resolutions done. But there are work to be done there in terms of getting the right skill set there, the capacity there to be able to move down the chain. So I think some of those work in progress as we move down the road, we will see, and as we are speaking, we are seeing people coming in.
Your Mr. Vakil is sitting right here. I'm sure he can give us chapter and verse on what needs to happen as far as the IBC is concerned. But let me get Mr. Saraf into the conversation. And Mr. Saraf, just to pick up on the manufacturing theme, a lot has already happened. The question now is what more needs to be done to really build on this alternative manufacturing destination opportunity that presents itself. In your experience, with what you've attempted to do, what more do you believe needs to be done, especially in the context of India finally now getting back to the path of signing FTAs? We've just done one with Australia 24 hours ago. What does the road ahead for you look like?
Thanks, Shireen. Yes, so I think that for India to achieve its target of $5 trillion GDP in the next 3 years, I think export competitiveness plays a very important role. I think, as Mr. Rao mentioned, merchandise export from India was 420 billion, been growing quite strongly. If we compare ourselves to China, and I can speak, being in the manufacturing industry and running manufacturing plants in India and China, China does $3.36 trillion in merchandise export. I think with the China Plus One strategy that that is prevalent right now, it's a great opportunity for India to significantly expand manufacturing exports. I think one of the areas where that can happen is by better availability of raw material. Coming from the steel industry and being a steel consumer, China produces 1.3 billion tons of steel and exports about 66 million. India exported about 19 million tons out of 120 million tons of steel produced, which is quite a significant percentage. In China today, there is tax on export of steel and certain steel products. India had that, and that's recently been removed. The taxation policy, the VAT system in China is heavily geared towards encouraging export of value-added products. I think if something similar can come up in India on a sustainable basis, I think that will greatly boost manufacturing exports from India. we have been a beneficiary of the US tariffs imposed on China, and actually we moved some of our manufacturing from China to India as a result. But having said that, the Chinese government was very fast to intervene when the US imposed the tariffs and actually reduced VAT and increased tariffs to dilute a lot of the impact of the tariffs. And as it so happened, China still cost competitive compared to India in spite of the tariffs. So I think those are some of the initiatives that the government can take to boost manufacturing exports, which is a key part to meeting overall targets.
You talked about how you moved some of the capacity from China to India, and this China plus one is something that everyone is talking about at this point in time, and we have seen a fair amount of the benefit of this China plus one go to countries like Vietnam, etc. The expectation is that India will do better, and we should not miss out on this opportunity. What is the fear that you have, and what are the risks involved in actually being able to realize this opportunity, this potential?
Well, yes, you're right that a great part of the manufacturing has moved to also countries like Vietnam, Thailand, Taiwan, etc. I think in terms of manufacturing competitiveness, I think India still has much better access to raw material, particularly steel, compared to Vietnam, Thailand, etc. Also, India has a good workforce and is also in a better position to manufacture high value-added technological products better. I think the export infrastructure, ports and the overall infrastructure, as that that needs to pick up, and I think as that picks up, India can do a lot better compared to these countries. But I think overall, India is in a far better position than some of these other countries that you mentioned to take advantage of the China plus one strategy.
Well, that's good to hear. And yes, a lot of the aspects related to, for instance, logistics costs, transportation costs, those hopefully should also start to be ironed out as the logistics policy, etc., gets rolled out. Mr. Gupta, let me ask you, in terms of the action agenda for change to build on the reforms already taken, since we are talking about the next decade, the next 20 to 25 years, what is it that you would like to put on the table by way of change?
Sure. Thanks, Shireen, for inviting. So I think all of us discussed that how each of us are expecting that the India's economy should cross $40 trillion by 2047. And so in my view, like from 3.3 to 40, if it has to go, while the linear growth, which all of us are talking about, infrastructure, manufacturing, exports, and all of that, I think it has to be supported by non-linear growth as well. Otherwise, it won't happen. And the non-linear growth, in my view, is the whole internet economy, which we are seeing, the way the digitization of infrastructure is happening in terms of the internet infrastructure. We are seeing how the smartphone penetration or the now 5G coming in, leading to new businesses getting generated or the new investments coming into the country. I think that is, in my view, will give a clear boost to or a fast forward growth to the $40 trillion goal. And like we have already seen, right, in a countries like US, there are like at least 10 $1 trillion plus companies. And if you look at those 10 companies, all are tech companies. So I think tech will play a very, very important role if you're to reach to that goal. I think, just slight diversion, but I was reading one of the long, where one of the economists had studied the long period of economic history, where the 1,000 year of economic history was being read, and it said that till 1850, India and China were the largest economies. So we are seeing only 200-year blip. Yeah. If you look at like 2,000-year history. So the next 1,000 years would be India for sure, one of the things. So I think that's the way.
You've gone beyond the century also. So it's not just India's century.
So I think so that's the way I see. So I think just to answer your question now more specifically around like what reforms one needs, I think in my view, the way the new age companies can be supported by the government in terms of the easier investment coming into the country or the easier exits when investors look for the taking capital out of the country from the exits which happen in India, the tax regime which happen here, or even for that matter, like we see already the lot of retail, the institutional capital which is domestic. Like today we are seeing the stock market is all-time high. Like if we give some sort of incentives to this capital being invested in the new age companies, like the way you give the tax breaks if you invest back the investment, the gains into the companies. I think if we can do something of that sort.
Perhaps not the right time to ask the government to do that when you're seeing new age companies lose 10 to 15% on a daily basis. I don't think the government has that kind of risk appetite at this point in time, but I get the point.
I think she is like in any economy, I think, or at a long period of cycles, is very common. If something goes up 1000x, it's bound to come 500x. But the net outcome is still positive.
That's why you have venture capitalists, right? Who are willing to write those large checks and wait by patiently. But Mr. Khara, it's an important aspect that was raised there on the dividend of digitization. And we're seeing that play out across a whole host of sectors, including, of course, the banking sector. I remember, I think it was the last year or the year before last, where you said everyone is talking about unicorns, but do you know that is already a unicorn and nobody talks about it? Where do things currently stand as far as your digital aspiration is concerned? And unlocking value at is that part of the plan?
Thank you very much. Well, when it comes to YONO, of course, it's really paying very good dividend as far as we are concerned. The way we look at YONO is one of the very important and powerful distribution channel. And when it comes to distribution channel, when we started, we only looked at it from the retail point of view, but today we have enlarged the scope of YONO even beyond retail. It's now a very important tool or the distribution channel for the corporate. It is a distribution channel for our international operations. It's a distribution channel for the rural. And YONO actually is comprising of three major components. One is a pure play banking, online marketplace, and also financial superstore. It's 3 into 1. So that is something which is a very unique proposition. So in terms of monetization, I think we would rather exploit it fully, sweat it fully to see that we create value for our existing stakeholders as against thinking in terms of carving it out or farming it out into a separate entity and monetizing it. I would rather think in terms of multiplying the value of the bank for all our stakeholders using YONO. Thank you.
Okay, you're not giving me a very clear answer just yet, Mr. Khara. Does that apply to mutual funds as well?
No, mutual fund is a separate company by itself. It's not a part of the distribution channel. They are the manufacturer. So they are the manufacturer of a product and the services. So I think that's a very separate subject. But yes, of course, YONO is very much integral part of the bank.
Okay.
I cannot probably think in terms of carving out a limb of myself. And there's no scope for grafting a limb. So that's almost a situation like that.
Okay, let me try and see if the audience has any questions here before we get wrap-up comments. Yes, sir, if you can raise your hand, we'll try and get a microphone across to you. Right here in this second row, please. Or the third row, sorry. On this side. So if you can stand up, it'll be easier for them to get you a microphone. Yeah. And may I request you to keep your question brief, please. Thank you.
Thank you very much. Mr. Raman has mentioned about, particularly the recession, and currently we are now focusing that, global recession will impact on Indian economy. Look at the, $5 trillion economy we are going to achieve. Because of this pandemic, 2 years we are going to delay. And second thing, the exports, because global market is a unique market for us, and how the Indian industry, particularly your industry, steel industry, and banking perspective, what will be the basis to the industry, especially for SME sector, to achieve the milestone of the Honorable Prime Minister, whether we are going to face the recession in India also, or what is the preparation for that? Thank you.
Yeah, please.
Thank you. I think in my mind, the pandemic actually set the tone. The recession is the conversation that we are having in the last 6 months, possibly. The pandemic broke the supply chain and disrupted a lot of ecosystem around established supply chains. So many of us in the industry were forced to find alternates. And I think that coincided happily with the government trying to encourage us to find alternates within the system. So if the SMEs, etc., were to take advantage of this, obviously the enablement from the government is one part of the story. The other part of the story is willingness of the large industries to handhold them. Because end of the day, we are known for, let's say, the quality that we represent in terms of our products and services. And we cannot lose sight of that. So be it in terms of safety standards, be it in terms of any protocols or SOPs that you need to have for SMEs to measure up and scale up, just as the startup worlds require handholding in being able to understand processes as they scale up, SMEs needs to be given that kind of inputs. Industry is aware of this because I think there lies some cost competitiveness as well. So I think it is a win-win situation if you are able to crack this code and not revert back to the old habits of going to few corners. Secondly, most of our customers actually pre-qualify the vendors. Just as when they give you a contract, they expect you to say who will execute the contract, who will supply for the contract. So they want to know a lot of details. So it's up to us to make sure that we make a strong case for some of these. So some of the companies have also started seed investing through their own captive venture funds in making sure this technology survives.
In the banking lens.
Sorry.
Banking
One
lens.
question, please. Yes.
Yeah, one, there is due to the quantitative tightening, globally there will be a liquidity crisis. Similarly, in India now, the deposit growth is lagging behind the credit growth. So when Khara Sahab is saying quite a lot of projects are also getting sanctioned, how are we ensuring liquidity? This is the one question. Similarly, due to the global recession, India was earlier benefited with the FDI, substantial FDI. Yeah. Are there any threat for our infrastructure growth? And one more just connected to that, the layoffs are all taking place globally. So is that trend likely to come to India?
Okay, let me get Mr. Khara to answer the first question as far as liquidity is concerned, and I'll get the panels to comment on the other questions.
Sure. As far as the liquidity is concerned, see, there are a couple of levers for the liquidity. Well, one of the lever is actually the government when they spend the money. That is also one of the important lever. Even while we speak, my assessment is that almost about 2.5 trillion to 3 trillion is a balance of the government with the banks, RBI. So that remains unspent. During the month of November, we did see some kind of a spending happening from the government, and it did dish out some of the liquidity constraints. Going forward, I think the banks have got the excess SLR, and that excess SLR will be utilized for ensuring that there is no liquidity challenge for meeting out the growth needs of the economy. Your second question was relating to FDI also. So I think FDI, we have seen a very mixed trend in the current year. There have been months when we have seen definite inflow coming in. And to my mind, the way inflation is now trending lower in US economy, that will lead to a situation where perhaps the Fed may not be increasing the interest rate as much. So that then again, when it comes to a sustainable demand, India is an economy which assures sustainable demand. So I expect that the natural inclination on the part of all those FDI players would be to look at India, and the flows, I don't think so. It may have some disruptions off and on, but eventually I think sustainable flows should be there on an ongoing basis.
Mr. Khara, you said that you hope or believe that the Fed may slow down the pace of hikes given the fact that inflation has started to ease a little bit in the US. What's the expectation given where we currently find ourselves on the rate trajectory? And we've got the MPC coming up as well in the first week of December. What's your expectation on that?
Well, I think when it comes to the central bankers, probably Fed is supposed to be the bellwether. So let us wait and watch what the FOMC decides. That will probably give us an indication. I think it is little premature for me to comment on that. Thank you.
So we'll have to wait for the FOMC. Mr. Rao, let me get you to address the question on layoffs. At this point in time, are you looking at laying off? Are you putting a hiring freeze of any kind? And when you speak with your peers, what's the sense you get?
No, today if you if you talk to any of the search firms that are hiring is at the peak as far as India is concerned. So in the manufacturing sector, it is not only just difficult to get certain special skills like digital skills or any sustainability related skills. It is very difficult to get in the market. Not only that, we are also finding extremely difficult to get at senior level or middle level or at the junior level, even diploma holders. We are finding extremely difficult. I think L&T, Mr. Raman can clarify further. Today, if we have to implement a project, and if L&T is the contractor or XYZ is the contractor, if they are getting 10,000 workers to implement a project, they are getting 30% more because they are not continuing in the project. There is definitely an attrition which is happening during the implementation of the project. Therefore, in India, I don't think it is an issue as regards to the employment is concerned right now. That is the situation. But globally, whatever is happening, I think that everybody is aware that there is an attrition, which is there is a layoffs which are happening globally. So it will get adjusted over a period of time. Then one more question which he has asked about FDI. Yeah. As far as FDI to India is concerned, if it is a good project, still FDI, there is a very good interest. Because when oil prices went up, it is only a transfer of savings from one country to another country. If one country has paid more for oil, another country got more money for that. That is why today, if you want to attract investment, there is several Middle Eastern companies, Middle Eastern funds who are willing to look at India very, very seriously. So FDI, I don't think is a problem. If it is a good project, good sector, there is a potential.
Well, that's good to hear, Mr. Shankaraman. On hiring and attrition and layoffs, what's the mood on the street?
We run a portfolio of companies, so we find that in the technology services companies that we run, attrition is still worrisome. I think somewhere between 20 and 25% attrition exists still today. And it is no joke for that machine to keep every year, you keep adding enough number of people just to be at the same place at the end of the year. So it's a challenge. And I think there is a premium to technology. To some extent, in my personal opinion, it is unsustainable because you can't put such a premium that it results in an individual actually becoming more important than the institution or the support system. So obviously, I think these will get self-corrected. We've seen that in the past, demand-supply situations. The kind of layoffs that is happening, the conversation around the conference rooms and town halls are changing. Today, people are talking about stability a little more than just somebody paying a few $100s more per hour or per month. So I think that's good development. When it comes to project execution, I think one of the fallouts of this inclusive growth is also the people who migrate from distant villages to come to work in various places. I mean, we're building Coastal Road in Mumbai. We employ close to 10,000 people working in that project. Many of them come from very far off, Uttarakhand, Orissa, Bihar, and stuff like that. As this inclusivity improves employment opportunity nearer home, I think it is to be expected some of these migrations would stop. So we need to find alternate solutions. So one thing that we have been working very hard is how to make construction activity a little more automated than what we are doing. The efforts towards 3D printing, efforts towards prefabrication, efforts towards constructing in a jigsaw puzzle manner, where you go and screw things up rather than work at the site. Now, these are some of the things that we are forced to do. And I think it's a good development because it does play on the likely shortage that is likely to emerge. And secondly, if India were to grow, whether it is 7.5 trillion or 40 trillion, I think it would require much more people to get more productive. That means options are going to open out of people. So I think it's important to stay relevant to certain sections of the people at all time. It is a challenge. Resource mobilization is a challenge. we find that as the turnover is increasing because of this trend, accidents are going up. The safety records are getting affected. And ESG scores recognizes the safety records very, very high. And leave aside the rating agencies or the scores. I think we owe it to our people and our customers that we run a very safe site. So I think people work at great heights without being careful about harnesses. And they've never used to these kind of work, so they think it's par for the course. So it takes a lot of effort to make sure that the right work methodologies and practices are adopted as we keep turning around people. We have at least 3 times turnover in labor force. Once during the sowing season, people go and work in their villages. During harvest, again, they go. And the third is the festival and marriages. So in our system, we are conditioned to look, when a site gets commissioned, at least 3 times the size of people we might have to keep constantly developing. We've developed an app, thankfully, to the new technology. All the workers are tracked today.
Is it a unicorn or not?
At the moment, it is survival. But let's see where we get there. But this is the idea to just keep the labor force engaged, even if they're out in a distant hometown.
Well, those are very specific challenges that you brought to the table. Yes, sir, we'll give you and use the final say.
Yeah, just a quick question to Mr. Chatwal. You mentioned about the excuse me. You mentioned about the strengthening corporate balance sheets. What are the 3 biggest risks that you see to the India growth story? Thank you.
I actually prepared for what would go right. Sorry, can you hear me? Yeah, I actually prepared for what will go right. But I think the couple of things which at least I see is some of the points Mr. Raman mentioned. I think the contract enforcement, I think that, or dispute resolution, I think that is a big issue for very large projects. I think the smaller ones investing in, I think that is there. The other is that I think we are doubling down on retail. I think we are, I mean, while the corporate balance sheets we see that for the next few years are quite strong, but if we see the retail build up, and there are sections of societies which are not fully, how do I say, when we came out of the pandemic, there were clear winners and there were people who weren't as well off as they came out of it. So I think those are areas which at least we are watching for. We don't believe there is a risk as of now because the banks, NBFCs are well capitalized. But if the risks are bigger than what we see, I think that is that could pull down some of that. And third is we don't make policy errors. I think go forward and run and then come back, put a duty, take it off. All of that without a transparent mechanism, I think usually puts I mean, investing public. I mean, one of the questions which people were asking that why is India Inc. not investing? I mean, while all the points are covered, there is a little point as well. It is also adjustment to the whole new regime. I think previously at one point in time, 20 years back, if you take bank's money, you would consider it's your money, it's not a bank's money. Today the pendulum has swung the other way around. So a lot of people today, when we see, they take debt, but they keep cash on the balance on the other side. So I think people are adjusting to it. I suspect that.
It's a good adjustment. Yeah. It's certainly a good adjustment to be had. Yes, I'll give you the final say.
Good afternoon. Chairman sir, से मेरा question है कि banks, you have to look for your profitability. And everyone is saying कि give credit more to corporate. What extra precaution you are taking that these loans what you are extending don't turn up to a PNPA? Because bad bank or ARC, they are giving a very high haircut, 3 to 8% only you are getting back. So what is the role of this bad bank or ARC in the banking sector, and how you are going to make the profitability as your main concern?
How do you ensure that the money is yours and not somebody else's, Mr. Karra?
Well, I think you are very right in saying this. And for a commercial banker, perhaps the prudent lending is the way of life. And the principle keeps on changing with the passage of time. It is a function of how the economy is. But at the same time, the very basic principle in terms of risk assessment, risk measurement, and risk mitigation, they cannot be forgotten ever. What went wrong in the past, the learnings have to be internalized. I think The banking system in the country has already internalized those learnings. They have built in enough cushion in terms of the provisioning, which is there in the system even today. And also going forward, underwriting and the effective follow-up and control. So this is something which are the cardinal principles to ensure that the lending should be right. Well, having said that, failures and defaults on account of the macroeconomy cannot be ruled out. And that is the very reason why banking system always believe in providing for the risk at the earliest site. As far as we are concerned, our corporate balance sheet to the extent of 95% is already provided for. I'm happy to share with all of you that we are having a net NPA ratio which is less than 1. It is perhaps better than many of the private sector banks also. And the kind of return on assets which we have and the return on equity, I think our shareholders should not be worried about in terms of seeing the sustainable profitability in the days to come. Happy to share that we have probably beaten many of the records this quarter, and I'm quite confident the way we are underwriting, we should be in a position to sustain it. Thank you.
Well, it has been a record-breaking quarter for State Bank of India, without a doubt, Mr. Khara. And, you know, again, since the theme of this conclave is the future of banking and the role that the banking sector can play, I wanted to ask you about the recent amendment that the government has brought in as far as public sector banks is concerned to extend the tenure of senior personnel. Of course, it doesn't apply to State Bank of India just yet. But do you believe that this provides the much-needed stability? And will this make a positive change?
Well, when you look at the private counterparts, they stay in the chair of the chairman for 10 years plus, and they bring in the stability also. Perhaps that was the guiding principle which led to this kind of an amendment. But when it comes to journey in public sector, that assumes that a person becomes a chairman or MD and CEO at the age of 50. There are both pluses and the minuses. The minus is that he may not have matured also. So promoting without maturation is a big risk. So I would say that, of course, it's a very important enabling provision, and it will certainly bring in stability. But whether it is for 10 years or otherwise, more important is people should be matured. They should have handled all the roles so that they should be in a position to lead the organization well. That is the requirement for anybody to become MD and CEO.
Thank you very much for that insight, and I think that's an important perspective that you've brought. Ladies and gentlemen, we're pretty much at the end of our time. I'm going to give each of our panelists 10 seconds, and Mr. Chatwal, I'll start by asking you if you believe that this is in fact going to be India's decade or century, you know, the biggest opportunity and the single biggest risk.
I think the biggest opportunity and the risk, I think similar for us, skilling is the biggest proposition. I think we've seen in various industries, the moment the growth goes up a certain level, we run for talent. So I think skilling, vocational skilling across the country is, I believe, the biggest risk and the opportunity we have.
Mr. Rao?
As far as opportunity is concerned, I think R&D and innovation, decarbonization, I think this is an opportunity where India can really lead in that. Then the other side where we need to work on really is factor productivity, land, labor and capital. So these three are required really to accelerate our growth. So on the factor productivity, certain reforms, I think they are the two things which are very essential.
Mr. Shankaraman?
Opportunity, you know, prices for guessing, infrastructure. The risk that I worry about is over-regulation. I think we find enough instances of regulators reacting very wildly to wrong examples that come around. And so you tend to swing from one end to another. And that actually destabilizes the growth opportunities. People begin to suspect as to what's the right thing to do. So overreach and over-regulation is something that we need to take care of. But otherwise, opportunity is immense.
Mr. Saraf?
I think the biggest opportunity is product exports, increase in merchandise exports. And I think the biggest risk is probably matching global productivity standards.
Mr. Gupta?
Yeah, so for me, both are same. In fact, the enabling government policies is the biggest opportunity to reach the $40 trillion goal. And the over-regulation through government policies could be the biggest risk. So I think it's the same thing.
Yes, and hopefully that we will find a balance there. Mr. Khara, I will give you the final say, sir, the biggest opportunity and the biggest risk.
Biggest opportunity is to cater to the demand within India and across the globe. Risk is to ensure we should not become inefficient. We must sweat our resources efficiently.
Well, thank you very much, gentlemen, for joining us here this evening to kickstart the 9th edition of the State Bank of India Banking Conclave. Thank you very much to our participants for your very insightful questions. Thank you to all our panelists for charting out an action agenda for what needs to be done, and more importantly, giving us their comments and their insights on where things currently stand for India, the opportunities and the road ahead. Thank you very much, ladies and gentlemen. Appreciate your time.
All right, that was a very interesting session, and it's thrown up a lot of fresh ideas for us. So, gentlemen, thank you. Shireen, thank you. I request you to stay on for just a minute. And Mr. Khara, if you could give away the small memento, please. Thank you once again, gentlemen. We're going to take a short breather now for some refreshments, but we're going to reconvene at sharp 6 p.m. We will have Mr. Amitabh Kant with us for a very special address. So please be back at 6 p.m. and gentlemen, we will have...
Check.
Okay, we will have our chief guest with us in just 5 minutes. So if I can request everybody to please be seated again.
We need to have people on the...
Hi, if I can request everybody to please be seated. We're expecting our chief guest shortly. Mr. Amitabh Kant is going to be addressing this conclave now. So if I can request everybody to please be seated. I'm going to request everyone else to please be seated once again. We are ready for our next address, and our chief guest will be joining us very shortly. Sorry.
ट्रीज बोल के जो ग्रीन सर्टिफिकेट वो है आपका स्क्रिप्ट पे हम जो मेमेंटो दे रहे हैं ना
Welcome back, ladies and gentlemen. It is now my pleasure to invite our next speaker and our chief guest this evening, Mr. Amitabh Kant, who is presently G20 Sherpa of India during its presidency year. Remember, he was CEO of Niti Aayog, the government's premier policy think tank. And of course, he's also been secretary at the Department of Industrial Policy and Promotion. Mr. Kant, let me please hand it over to you.
Chairman SBI, Mr. Dinesh Khara, distinguished guests, ladies and gentlemen, I'm truly delighted to be here at this 9th SBI conference on policy issues. We are meeting at a time when India will be soon taking over the presidency of G20 from 1st December onwards. This will also be a time when the world will be in the midst of a lot of global turmoil. We are in the midst of a looming crisis as far as economic growth is concerned. By the time we take over, different parts of the world will be seeing a huge slowdown. Some in many parts of the world will be in recession. There is a huge global debt crisis. Almost 70 countries of the world are today impacted by a major debt crisis. The Sustainable Development Goals have been badly impacted in the post-COVID era. Almost 200 million people have gone below the poverty line. Almost 75 million people have lost their jobs. And this means that midway through the year of 2030, which was the SDG goal end year, this will be the midterm. We've not seen a progress, we've actually seen a regression. Global supply chains are badly disrupted all around the world. We should understand that almost 40% of the global chip supply comes from one country, and that's Taiwan. And the China-Taiwan turmoil will lead to a breakdown in supplies of almost all chip supplies for defense manufacturing, automobiles, mobile, and therefore there's a huge challenge as far as dependency on one country for the global supply chain is concerned. And then finally, there's a huge challenge as far as the climate action and climate finance is concerned. To achieve 1.5 degree of centigrade is a huge challenge, and this would require just energy transition, which would mean that a lot of climate finance will have to flow in from the developed part of the world, which had committed to about $100 billion per dollar at the Copenhagen conference in 2009, and subsequently reiterated that at COP21 and COP26. So this is in the midst of all this turmoil, in the midst of all these global crises, slowing down of the global economy, etc., India will be taking over the G20 presidency. This is the first time in the history of G20 that successive developing countries are taking over the presidency of G20. Indonesia will be just finishing its presidency. India takes over. After India, Brazil takes over, and then South Africa takes over. It's important to spell this out because G20 has evolved from G7. And it's important that emerging and developing markets play a critical role, because this is for the first time that emerging markets have had a role to shape the global agenda. Till now, all developing countries were reacting to the drafts and agendas set by the developed world. This is the first time that the developing countries are shaping the agenda of a global economy. And this is important to understand because actually in the global economy, the share of the emerging markets is growing, the share of the developed world is actually declining. And in due course, the share of the emerging markets will become much greater than the share of the developed world. G20 is important because almost 85% of the global GDP comes from these G20 countries. 78% of the global trade comes from G20 countries. Almost 90% of the patents, global patents and trademarks come from G20 countries, and they account for almost 2/3 of the global population. And therefore, G20 has actually shaped the global agenda for a long time now. In 2009, when there was a major crisis at the London Economics G20 summit, the G20 came out with a huge package to actually drive global growth. The Basel Basel III reforms all emerged from G20. The debt sustainability initiative for most developing countries during the Saudi presidency as an initiative of the Indian Prime Minister came from G20. So major global issues and global action have been driven by G20, and therefore it gives an opportunity for India to really use this crisis as a huge opportunity. Every crisis is an opportunity, and whether India can really use this crisis to drive many of this agenda will be very critical. The Prime Minister in Bali has just said that India's presidency will be very action-oriented, it'll be inclusive, it'll be very bold, and it'll be dynamic, and therefore India really has to set the agenda for the world in the coming months. The G20 is important because, you know, in the context of India, there are three critical things which really drives a G20 presidency. The first and foremost of that is a political narrative, whether there's political leadership. The second is, what is the content? What is the policy narrative, or what is the policy initiatives that we are trying to push? And the third and foremost, that is the content, and the third is, when you're doing it in India, what is the logistics, how you're doing it, what is the kind of, whether you do it to perfection or not. So these are three broad agendas, and I'll try and touch on some of them. First and foremost, let me say that the political narrative as far as India is concerned is really strong because there's strong political leadership. India's the fastest growing large economy in the world, despite a slowdown of economy in many parts of the world. It's also important to understand that India has done some tremendous amount of development work in recent times. We've opened, just to give you some figures, to understand how the world views India, and since I negotiated the Bali agreement in Bali, the G20 agreement on behalf of the G20, and we succeeded in it. Let me give you a perspective of how the world views India. You know, India is the only country which from 2015 has opened close to about 40 crore bank accounts. I mean, this would mean that every second account from 2015 to 2018, every second bank account opened across the world was actually opened in India. 55% of the bank accounts opened in the world during that period were opened in India. So it was transformational. We've constructed about close to 3 million houses from 2015 onwards till now, which is actually in reality like providing a house to every citizen of Australia. Every citizen of Australia. We have provided water connections to about 24.3 million population. That's about almost 10 million households, which is like providing a water connection to every citizen of Brazil. And we've provided 10.1 million toilets to Indians, which is like providing, all in the last 5-6 years, which is like actually providing a toilet to every citizen of every citizen of Germany. So we've done exactly what Australia would have done to provide every citizen, water, every citizen of Brazil, toilet, every citizen of Germany, and we've done about over 2 billion vaccines. Vaccination, and when you talk to Americans, they do not, which was totally paperless, cashless, it is like providing 7 times the population of United States vaccination, 6 times the population of European Union. Many of us sitting in India or in this hall do not realize the size and scale of what India has actually done. The extent of what we've done, even in terms of digital payments, is enormous. To understand this, that we do 7x of payments last year in 2021. We did the total amount of payments, digital payments that we did was 7x of what US, Europe, Canada, Mexico all did together. 7x. And we did 3x of what China did, and we did 20% more than what USA, EU, and China did together. So that is the size and scale of the transition that has happened in last 6-7 years in terms of the digital transformation that has happened. And this has really enabled us. You know, I've, over the years, been a witness to this. I worked in Kerala in the traditional fisheries sector where I've seen, you know, the job given to me was to transform the lives of traditional fishermen. I was able to give new outboard motors so that they could go much further into the sea. I could provide them new fishing nets, which were then called the disco nets. We gave them outboard motors, new fishing crafts, fiberglass crafts. But opening a physical account for a bank manager, they were prone to drinking, and whatever you were catching every day, they were prone to drinking, so we had to open bank accounts. Opening a bank account for the self-help groups of fishermen was a nightmare for me. You know your customer was a nightmare. It used to take us 8 to 9 months to open their bank account. I've seen this transition from 8 to 9 months to less than a minute where they open their bank account with their biometric. So this has been the transition which we've seen. I've not used I have debit credit cards. I've not used them for over 3.5 years now. No debit card, no credit card. The only time I used it when I went to San Francisco to meet my daughter, I had to hire an Uber vehicle, I used my debit card. But I've not used it. I've not been to a physical bank for over 4 years. I've not been to an ATM machine for over 3.5 years. My mobile is my bank, and I transact everything through my mobile. And therefore, what India has done is transformational. When you talk to IMF, World Bank, or like in Brussels with the EU officials, they feel what India has achieved through the digital public infrastructure is absolutely phenomenal. It's truly unique. And therefore, there's a huge political narrative, a huge development story of India to be told to the world. And therefore, there is a strong political leadership which is driving this. As far as the content is concerned, it's very important to brief you on this, that what will be our priorities and what are the challenges before the world. So first and foremost, to my mind, the key challenge before the world today is how to drive inclusive and resilient growth. And India has to be at the heart of it, because without growth, nothing else can be achieved. And therefore, in a moment of crisis like this, when the global economy is slowing down, what does the world need to do to actually accelerate the pace of global economy growth? If global economy doesn't grow, India will find it very difficult to grow, and so will other countries in many parts of the world. And therefore, accelerating the pace of inclusive, sustainable, resilient growth will be very critical. To my mind, this is important. The second critical point is that how do we, if 200 million people have gone below the poverty line, and when leaders of the world meet, when all leaders, top leaders of the world meet, the challenge before them is about the citizens of the world, and therefore, how do you enhance learning outcomes, health outcomes? How do you accelerate the pace of sustainable development goals for the world? That's a huge challenge. It's a challenge for India, but it's a huge challenge for the world. And therefore, one of the key challenges before the global leaders would be that how do you bring in a huge package to accelerate the process of the SDG implementation? How do you ensure that there's credit flow? How do you ensure that learning outcomes improve? How do you ensure that health outcomes improve? These are very critical issues for the world. The third is that a lot has been talked about climate action. India has not contributed to it. Our extent of contribution at 1.5 degree, if you look at the total carbon space available, is 2,400 gigatons. India's contribution is just 52 gigatons. It's very minimal. We've utilized only 1.5% of the total carbon space available. We are entitled to, logically, on a per capita income basis, we are entitled to about 17.5%. And therefore, in the years to come, the challenge will be for the world to grow in a highly sustainable manner. And one of my beliefs always has been that is very, very important to do this in the years to come, and much of this I'll come to a little later. But to enable this to happen, because if 90% of the carbon space has been occupied by the developed world when they were industrializing, the principle of just transition has been accepted, and the developed world must finance this transition for the developing countries. Because without that, it will not be possible for developing world to make this transition. There are huge costs when you move away from coal to many other energy forms. But having said this, climate action and climate finance will be critical issues which will be discussed by the leaders and all through the year. But having said this, I must say that it's very necessary for a country like India to really use this opportunity to technologically leapfrog and become a green economy, and for bankers to finance for companies which are going to go green. Companies which do not go digital and which do not go green will neither be able to attract value, nor will they be able to attract capital in the coming days. And therefore, it's very necessary for the leadership, the corporate leadership and the banking leadership, to ensure that India makes this transition very rapidly. And to my mind, and I'm a strong believer in that Indian business leadership must be very aggressive about it. If we could, in renewables, achieve our NDC targets 9 years ahead of schedule, it is possible for us to use renewables. You know, if you do too much of renewables, you will end up with what is known as the duck curve. Your grid will not be able to manage. And therefore, there are two alternatives. Either you do battery storage, advanced chemistry cell battery storage, for which we've announced a production-linked incentive scheme, which is very important. But more important than that is to use renewables to crack water, use electrolyzer, and produce green hydrogen. And the challenge there is that the cost of green hydrogen is about $4.5 per kilogram. How to bring it down to $2 per kilogram by 2026-27, bring it down to $1 per kilogram by 2030, and make India the production hub, the technology hub, the electrolyzer hub for the rest of the world, and make India not merely the producer, but the biggest exporter of the world. I'm saying this because no other country in the world has the climatic conditions to match India as far as renewables and green hydrogen is concerned. You do not face a competition from China in this regard, in terms of the size and scale of your climatic condition. India is blessed. So if India is blessed and India has top-class entrepreneurship, there is no reason why we should not technologically leapfrog in these areas. If we lose this opportunity, we will never be able to move from a fossil era to a non-fossil era. And that is why the Prime Minister in his Independence Day speech said that by 2047, we should become fossil import-free, totally fossil import-free. And that is the trajectory which is needed. Because if we do not do this, we've seen the present situation of energy costs rising due to the Russia-Ukraine war. We've seen currencies depreciating against the dollar, and you've seen a huge, huge impact on your economy. And therefore, this climate action and climate financing will be a key issue. And linked to that will be the issue of restructuring, or let me say the reshaping of the multilateral financing institutions. Because most of these institutions, whether it's IMF, World Bank, United Nations, all of them were designed for the post-World War II period, in the post-Bretton Woods period. And they are not designed for the post-COVID, and they are not designed for the climate action era of today. And therefore, how do you redesign them? Redesign them so that IMF and World Bank, instead of doing direct lending, become institutions for credit enhancement. They become institutions for first loss guarantees. They become institutions for blended finance, so that the world can see 15x financing of what the world sees now. And therefore, this is a huge challenge, and the American Treasury Secretary has spoken about this, on how World Bank and IMF actually should get out of direct lending. totally get out of direct lending and do credit enhancement and first loss guarantees. And therefore, this will be a huge, huge challenge for the world. Making these multilateral financial institutions move away from direct lending into financing for SDGs and climate. The United Nations, as the Prime Minister said in Bali, has been a dysfunctional body, and that's what makes G20 very important, because United Nations is too large a body. It's a body of 186 nations. It's unwieldy. The G7 is too rich, too elitist. Its importance is falling. G20 is important because it comprises of both the developed and the developing world. And therefore, redefining the nature of multilateral financing institutions is very important. The World Bank, in fact, has been asked by countries now to reshape itself, and so will the IMF, and I'm absolutely sure that you'll see in the next 3 to 4 years a completely redefining of these multilateral financial institutions. The other key issue will be the challenge of global debt. If 70 countries around the world are facing this challenge of global debt, crisis in one part of the world will have huge impact in other parts of the world, and when countries, their currencies start collapsing, it'll be a huge impact all over the world. And therefore, it's not just restricted to Chad or Zambia or Sri Lanka, but many parts of the world. And the challenge there is that global debt is largely handled by what is known as the Paris Club, because funding used to be done by, by some of these European countries earlier, but over a period of time, what has happened is that China has financed many countries in many parts of the world in a very opaque, very non-transparent manner, where actually the extent of their debt is not even known to the recipient country. In several cases, they have said that the debt should not be disclosed to the local parliament. So the challenge will be that you can't have an IMF package for a country to say that we'll clean you of your debt if that package goes to pay for the debt of China or other. So you need to put IMF, you need to put private sector, which has given debt in some parts of the country, and you need to put China together and restructure those global debt. So this is a huge, huge challenge to bring consensus around the table on this, and particularly bring China on the table on this. China has opposed this heavily. So China says that we'll not join the IMF or Paris Club, so we need to bring all of them together to ensure that there is a huge consensus around this, because once countries start collapsing, you'll see a whole spin-off on the global economy. The other key aspect is that when you hold your presidency, when India holds its presidency, it's very important that we are able to push out an India narrative. And the India narrative, to my mind, is that one of the key things, most technologies in the world come from the developed part of the world. It's rarely that you see technologies emerging from the developing part of the world. But what India has done is truly unique in terms of the digital public infrastructure. It has created unique extent of digital public goods, which has enabled India to do a vast number of remarkable things. And I don't know whether some of you have read the Bank of International Settlements, BIS's recent report, which says that what India has achieved in 7 years' time, in terms of DBT, in terms of opening of bank accounts, in which SBI has played a major role, in terms of the fast payments, all this, actually what India has achieved in 7 years actually would have taken any other country 46 years. So what India has done in 7 years would have taken 46 years to achieve. And therefore, it's a phenomenal, unique model where everybody has a digital identity. And because of that digital identity, you have a bank account. And because of that, we were able to provide assistance and support to over 800 million people during the COVID period. I've seen government schemes when I was a young officer in Kerala. Money used to go from central government to state government to district, and one of our prime ministers said that only 15% reaches the actual beneficiary. In 600 schemes, money goes straight into the bank account without any leakage, and we've seen the fast payments growing phenomenally, hugely. We've done this massive amount of fast payments, 200 million transactions, close to about 6 billion transactions a month, 6 billion transactions a year. That is the extent of your that is the extent of your scaling up that India has done. So it's important to understand that India has used this in many other areas. We've done this for DigiLocker, we've done this for CoWIN, we've done this in cashless, paperless for Ayushman Bharat, where we've provided insurance to 500 million people. 500 million people means almost the population of US and EU together. Totally digital insurance. You can move from one place to another place. And because of payments, because of this, you've seen a whole range of young startups who then use this cashless, paperless to do lending, totally cashless, paperless methodology to do lending. And then I've seen a number of startups today using the same methodology of digital identity and payments to do wealth management. So young startups like Zerodha and all have become unicorn grown because they do wealth management. I mean, you do complete stockbroking, wealth management, all cashless, paperless. And then on top of that, I've seen many young companies, young startups, all becoming big unicorns because they do cashless, paperless, end-to-end insurance. So Digit, ACO, all these are young insurance companies. I mean, I struggled with my insurance, buying my insurance policy for months together. These are all guys doing it on a tap in a minute on a mobile phone. Digit and ACO, you look at them, phenomenal work. All this has happened, this is the transformational story of India. So I think this is one story which we need to tell the world, that we built public infrastructure on which we've allowed private sector to innovate. And this is the only country in the world where Google Pay competes with PhonePe, gets beaten. It's the only place where WhatsApp competes with Paytm. There are 30 different apps on which we do payment, including your YONO and all that. Everyone is competing. So 30 different apps. This is the only country in the world. So it's a unique story of the transformation of the payment system. Now, it's important to understand this because actually 4 billion people in the world do not have a digital identity. 2 billion people in the world do not have a bank account. 133 countries in the world do not have a payment system. And if you do not have a digital identity, if you do not have a bank account, you can't lift people above the poverty line. And if you cannot do that, if you do not have a digital identity which is not linked to the banks, you can't do payments. And therefore, the world cannot be transformed without digital identity. It need not be Aadhaar, but some form of identity. You can't transform if you are not able to link accounts identity to bank accounts, and if you do not have fast payments, and therefore you can never technologically leapfrog in these countries. They will forever remain poor. They will forever remain below the poverty line, and the citizens of these countries will forever never be able to improve on education, health, agriculture, all these areas. And therefore, the challenge for G20 is, how do you take the India model and replicate it across many of the African, Latin American, many countries where people do not have an identity, where people do not have bank accounts, and where people do not have fast payments. No other model in the world can do this. No other. You can't do this with the big tech model of Google and Facebook. You can't do it with the GDPR model of Europe, which works on privacy but kills innovation. The only model available for the world is the Indian model. And therefore, you need to replicate that story in other parts of the world. That's the India narrative. The second key narrative is what India has achieved in the area of health. And that is that India has actually built a unique story around its vaccination. It is the pharmacy of the world. It has provided insurance to 500 million people, which is cashless, paperless. It has opened, primary health centers across 150,000 centers which also combine wellness and Ayurveda and yoga and all that at the grassroots level. So it's a very unique story to be told of Indian entrepreneurship in the field of pharmacy and being the vaccine capital and being the pharmacy capital of the world. So that's another great story to be told to the rest of the world in terms of health and how do we take our vaccines and make them available to the rest of the world. So in terms of content, it's a very compelling story to be told. And the third story is all this, that what India has achieved in its journey of 75 years. Its journey of 75 years, what India has achieved, it has achieved as a democracy. And therefore, India is really the mother of all democracies, and that it has been able to do this with all dissent, different governments, and we've shown that with unity and diversity, it can be achieved. And it's not a model which we've not followed a model of China where one person or one party dictates everything. We followed a model of democracy, dissent, discussion, debate. We are all argumentative Indians, and therefore our model is very unique in many ways. And there is a huge narrative of India to be told. And thirdly, I want to come to this bit about how we are doing it. And therefore, what the Prime Minister wants is that actually G20 should not be restricted to Delhi or Mumbai. He wants this to be taken out in many parts of India. And therefore, we are doing about 200 events in almost 56 cities of India spread across India, including Kashmir, including Arunachal, including Manipur, including the whole of Northeast and many parts of India. So 200 events spread across India means that there is a huge challenge for the state governments to use this opportunity to improve infrastructure, to use this opportunity to really make the states top class. This is an opportunity to improve your drainage, sewage, solid waste, road infrastructure, everything. The world is going to come to us, and therefore all states must become, all states have been asked to do this. And lastly, our belief is that we should use this opportunity to really sell a unique experience of India. That any visitor who comes to India, any participant who comes to India, and all the top leaders of the world will come. There's not one single top leader who will not come to India during this period, and the best of intellectuals, the best of everyone from IMF to World Bank to WHO, everyone will come. This is a unique opportunity to really send back every visitor, send him back totally mentally, he should go back as he may come as a guest, but we should actually use this opportunity to culturally elevate him, mentally invigorate him, really spiritually also rejuvenate him so that he goes back really as a great brand ambassador of India. So my belief is that this is also a great opportunity to promote and market India as incredible India. And I really believe that India is one of the greatest travel and tourism destinations in the world. We have a huge opportunity. It still remains largely untapped. So if we are able to improve our infrastructure, there's a huge opportunity. So all across India, this year is going to be challenging in terms of the global economy. It's going to be challenging for all of us. We want to make this a very action-oriented, very inclusive and very reform-oriented year. I strongly believe that there are various challenges facing the Indian economy, and the key to that is that more and more reforms we need to carry out. We need to make India more and more easy, more and more simple. I've been a long-term believer that India must become the simplest and the easiest place to do business in. We must open out more and more. Rules and regulations must become less and less cumbersome. We should eliminate them totally. And I've been a long-term believer that bankers play a very major role in the growth of any country. No country in the world has actually grown without bankers being the key driver in its growth story. No country has grown without private debt. I'm against public debt, but I'm in favor of private debt in a sustainable manner. I still believe that the private debt of India, private debt to GDP ratio is still very low. It needs to grow at a rapid pace in a sustainable manner. I'm totally against any kind of reckless banking, but I still feel that there's a huge opportunity. We are still, our private debt to GDP ratio is at 55%, 56%, whereas many of the developed countries, it's at 160, even South Korea is about 120%. So there's a huge possibility of massive growth. We can't create great companies without debt. No country in the world has actually grown without debt. So bankers are the most critical players in India's growth story. And if bankers have to play a major role, then the most critical player in India's growth story will have to be the State Bank of India. Without State Bank of India, India cannot have its growth story. India cannot grow and expand at rapid rates. And India cannot have a great G20 without State Bank of India. Thank you very much.
So thank you very much for a great address, which I may say. When it comes to energy, perhaps I wish it should be infectious. Everybody should get so well charged with your address. Sir, one thing which crosses the mind, of course, you started by saying that ESG is one of the major focus area for G20, and that being the major focus area, we have some challenges which you have seen. We are a transitioning economy, and of course there are good opportunities for India to really adopt ESG, and particularly if we look at the availability of sunshine across the country and almost for all the 12 months in a year, that actually gives us a huge scope for adoption of the renewable energy, more so the solar. And I think it is happening also in the country. But one challenge perhaps we face is essentially in terms of availability of the solar panels and the cells. What you mentioned in your address also, the huge dependence on a particular country for the solar cells is a huge risk for the globe as a whole. Any thoughts which you would like to share on this particular subject, sir? Though we are scaling up the capacity in the country when it comes to solar power and the solar cells, but I think the kind of pace which it has picked up, we actually need to scale up the capacity significantly. Any thoughts which you would like to share?
So that's a very important question, because when I was in Niti Aayog, one of the things I worked on was, I've been a long-term believer that India's growth story will not happen without two things. One is the process of rapid urbanization, which to my mind is, and good sustainable planned urbanization is very critical. And the second is that India must become a very integral part of the global supply chain. And this would really mean that we are able to get size and scale of manufacturing in India. And that's how we structured the production-linked incentive scheme, that we'll support companies to get the size scale for 5 years. You are here, we'll support you to go here, then we'll support you to go here. Keep supporting as long as you keep growing bigger and bigger and bigger and bigger and bigger for 5 years in a row. And one of the PLIs was for ensuring that we do solar manufacturing end-to-end in India. One of them, we looked at, the other thing was that we looked at all sunrise areas of growth. I strongly believe that India will never be able to grow at rapid rates till you don't get into completely new areas of growth. Absolutely. It's very important to understand that last year, the total value sale of mobiles and electronics was more than in value terms, was more than the total value of automobiles sold. It's important to understand this. Yeah. That, you may keep saying that I want to do textiles, I want to do food processing. But the world is growing in another direction in value terms. And those sectors we must identify. If you are not able to grow in areas of mobile, electronic manufacturing and get the size and scale, if you're not able to grow in solar energy, if you're not able to drive electric mobility, if you're not able to do advanced chemistry cell battery, and if you're not able to do green hydrogen, India can never grow at 9 to 10% per annum. India can never even go at 7%. Let me tell you this brutally. that you need to get into new areas of growth, you need to get into sunrise areas of growth, you need to get into areas of growth where the world is seeing a major disruption in terms of technology. That's where the value and the cream of growth is. And therefore, these are the areas where we've been losing these. Why has China grown into this big mammoth empire in terms of growth? Simply because it got into these areas of growth. It stole technology, it borrowed technology, it copied technology, it did everything possible, but it emerged as a champion in those areas of growth. And therefore, these are completely, and therefore the PLI scheme was designed for that. Mobile, electronics, advanced chemistry cell battery, solar manufacturing, and that, my belief is, my very strong belief is that these are the areas, and electric mobility, that these are areas where the banks must do a lot of hand-holding. Banks must work around first loss guarantees, credit enhancement, all these ways to ensure that India transits into these areas of growth and get the size and scale. I was driving electric mobility, and I can tell you that established players were totally against it. These young startups came and disrupted, and once they disrupted, there was no option for established players to follow them. And therefore, established players will get contented with what they are doing. You will have to push the young players to disrupt the market, and that will force others to follow suit. And this will have to happen in many, many areas. Otherwise, India will not be able to grow at high rates.
I think, sir, the other question which I have in my mind is essentially coming from the fact that what you mentioned in terms of the debt to GDP ratio in many of the countries is actually quite alarming. And more so when it comes to our neighborhood too, we have got a situation like that. That is actually exposing us to, apart from the economic risk, also some of the political risk as well. So as a G20, during the period of the G20 presidency, I think we'll have a lot to do in this direction. Would you like to throw some light on this, in this direction, sir?
So we had a huge debate and discussion. Actually, there were 2 points. Let me tell you, and I want to be frank about it here. There were 2 points on which there was massive debate and discussion in the last Sherpa meeting. Sherpa is actually like an envoy to the leader, so he negotiates on behalf of the leader. And for 5 days, all through the year, all ministerial meetings were deadlocked. No communique came out, and everybody expected no communique to come out here. And for 5 days we were locked. Nothing was coming out because of 2 reasons. One is that the G7 were insisting that the statement should be, very, very, they came out with a statement which was very, very hostile on the Russia-Ukraine crisis. So our argument was that G20 is not a political body. The political body is the UN Security Council. And therefore, don't bring too much of politics into G20. It should look at economic issues, etc. Their argument was, to be fair to them, their argument was that the war in Russia and Ukraine is actually impacting fuel, food, and fertilizer. And their gas prices, Germany is becoming globally uncompetitive. Their gas energy prices have gone up 3x. The rest of the world is facing a food crisis, so war has huge economic implications. And they had a point in that. So this debate went on for a long time, and finally India, we drafted the para. We said that let's not make this political, let's follow the UN resolution, and we drafted it based on the UN resolution, that para. And that's how we could bring both G7, Russia, China, everybody together because of the weight of the emerging countries. India worked with Brazil, South Africa, Mexico, Saudi, including Singapore, all on this. The second key challenge was on the debt issue. And the debt issue had been discussed in the finance track extensively. It came in the Sherpa track as well, where China refused to be a party to this. And actually, China said that it's our debt, and we will negotiate one-to-one with individual countries. We'll not be a party to IMF. We'll not be a party to the Paris Club. We'll not. So the argument which we kept saying is that without China falling in line, it'll be very difficult to have a debt package for the other countries. And that's a key challenge which remains. China finally, on the debt issue, it was 19-1. China was the only country which opposed it, and therefore there was a footnote from China that we opposed this. And no consensus could be arrived at on that issue. So you will see a huge, huge challenge on global debt, and that's a very, to my mind, that's one of the biggest challenges the world faces today. Because if countries start falling, their currencies start falling, then you'll see a huge cascading effect on all this. I think every other country realized this, but China just stuck onto it.
Any questions from the audience?
Good evening, sir. While you've really elucidated between the political versus economic dimension, is the G20 chairmanship a precursor to the permanent seat on the UN Security Council? And your views on that whole issue?
See, the UN is as I said, not merely UN, many other institutions are post-Bretton Woods period creation. And we've seen the inefficiency of the United Nations in the Russia-Ukraine crisis. The Prime Minister actually talked about it at Bali, and therefore there's a need for UN to restructure. The G20 brings in all the developing and emerging markets. The UN doesn't. It's restricted to 5 countries, and therefore they have the veto power. So even on the Russia-Ukraine crisis, as long as Russia keeps doing the veto, you're not able to find a solution. So the challenge really is you may become a part of it, but eventually the UN as an entity needs a certain restructuring for the present political reality of the world. That's one point. And the second is that, the G20 presidency, one is that India leads it, but the G20 Prime Minister, being the G20 president, gives him the ability to discuss and negotiate and talk and do many other things, which I'm sure since he said that it will be very inclusive and reform-oriented and action-oriented, he will drive many more agendas. I'm absolutely clear on that he'll drive many other global agendas as a part of this G20 presidency.
Mr. Kant, good evening, Divakar Gupta. Your clarity, your focus, your vision, your excellence are amazing and remarkable, and I saw it for the first time when I met you, when I came from ADB in 2017. I have 2 questions very quickly. The first is about the economy. As you said, India has done a phenomenal job despite being a democracy. At the same time, the fact is that there is a plethora of permissions, ratifications, and several actors. We could have been much more effective if that part had been a lot simpler. What is your comment on that? The second question is regarding your, I'm a proud state banker also, and I realize that you give equal importance to the fact that the banking industry has to take us ahead. It is about regulatory overreach. Today, even today, from 70%, the public sector banking space has come down to 53, 54%. But that 54% is riddled by paralysis in decision-making because of regulatory overreach. How can we unlock that so that the banking industry can really discharge the role that it is expected to discharge?
So 2 very important points, and let me start with the second one. And that is that I've been a long-term believer that every regulator must act as a development agent and as a change agent. They may be called as regulators, but they are actually, if you look at IRDA or if you look at SEBI or if you look at anyone, part of their job is to make the economy grow. And I'm a great believer that each one of these regulators, whether it's RBI, whether it's SEBI, whether it's IRDA, or even the Competition Commission of India. If you look at the preamble of the Competition Commission of India, the first line it says for the development and growth of India. And therefore, the role of every regulator has to be to make India grow. And it has to be to my mind, the regulators were also designed at a particular period when we were going through a socialist era. And therefore, there is a huge need for a change of mindset amongst many of the regulators. I strongly believe, and I think there's also a need for regulators to themselves believe that they need to play a very major and a critical role in the development story of India. And that India cannot grow at high rates without the regulators driving many of these things. Secondly, I've driven the ease of doing business myself as Secretary, Department of Industrial Policy and Promotion. The Prime Minister is the greatest believer in this. I think we've dismantled a lot. We jumped up 79 positions in the World Bank ease of doing business, but the important thing is that we started making states compete. I still remember when the first year we did it, Gujarat came number 1. Next year, there was such intense competition, Andhra beat Gujarat. The third year, Telangana beat Gujarat and Andhra. But the good thing was that, the eastern states of India, the Jharkhand and Chhattisgarh, came 4th and 5th. They improved a lot. So I am a great believer that we should continue to rank, we should make them compete, we should name and shame them, we should put out all their rules and regulation in public domain, force them to improve, and that's the only way they'll grow. And that's important because my belief, I've been long-term saying that if India has to grow at those rates, you need about 12 states of India to grow at 9 to 10% per annum, year after year, year after year. And second belief is that, you don't need just Gujarat and Maharashtra to grow. You need UP, Bihar, Rajasthan, Madhya Pradesh, Chhattisgarh, Jharkhand. They must become the growth drivers of India. If they become the growth drivers of India, there's no way India will not grow at high rates.
I think Mr. Sagar, My name is Sandesh. Mr. Sagar's, Achha, okay. You can.
Hello, my name is Sandesh. In 2023 budget, what is new attractive to finance minister to invest, NRI to invest in banking sector?
भाई ये सवाल तो केवल फाइनेंस मिनिस्टर ही जवाब दे सकते हैं. ये मेरा बोलना तो बिल्कुल ठीक नहीं होगा.
No, as per the SDG, that what you call removing the hunger, as well as removing poverty, and after COVID and also with this geopolitical and all, the equitable distribution of wealth between the country to country as well as in the country, the gap has widened. So as per the G20, what are we to take some initiative or see that the poor countries and all other developed countries, similarly between the people. So you have any points on that?
Important point, and I dwelt on it a little bit, but I think one of the key things will be that, as the Prime Minister has said actually, that before we get into it, the Prime Minister will be interacting with all the developing countries of the world. So with the global south, the Prime Minister will be interacting so that he hears their voice. And, we bring out the agenda of the developing world and act as a leader of the global south. So one of the key things will be on the SDGs. The key thing will be education, health, nutrition, how to improve learning outcomes, how to improve health outcomes, what kind of a package, what kind of financing. All these will be key issues which will be discussed and debated during the G20 presidency.
Sagar sir, please.
So, sometime back I was thinking that why India is sitting on the sidelines on the Ukraine war, and we sort of abstained on the resolution. And then suddenly at the Bali, what I saw was we have taken a complete command of leadership. And it was amazing to see how we were actually influencing the decisions there in many sense. So from the strategic interest for India, I mean, how do we tend to resolve this in our G20 presidency? Do we sit on just force the sort of interested parties to start talking to each other? I remember Jeffrey Sachs lately condemned the US for not being talking to the Chinese, and that video went pretty viral all over the YouTube and stuff. So so this issue will again come up, that do we have to take sides on one side, or do we just make them talk, or do we actually sit in the midst and negotiate a solution? So what would be your advice on how to sort this sort of a dilemma? Because if we sort of get too embroiled into the conflict, then that is also not good for the country's interest. But as a G20 leader, if we don't try to solve this, the geo-fragmentation is anyway going to bring down the world. We are seeing high inflation. We are seeing supply chains completely disrupted. So we need to do something about it in our own interests also. So what would be your advice to the government on how deeply to get involved on these?
So one is that the government has been, firstly, talking to everyone. The government, the Prime Minister and the government and the Minister of External Affairs and the Ministries of External Affairs has been talking to everyone. And the only reason why we could arrive at an agreement and we could demonstrate our leadership, because even the G7 felt that the only people who could convince Russia to agree to that statement was India, and we were the only people who could convince Russia to agree to what was being drafted. Because it was drafted by us, the Russians agreed. And therefore, in the present scenario, my feeling is that we should continue to talk to everyone. We should continue to be equidistant, but it's also important that I'm a great believer in economic growth. So I believe that the biggest opportunity for India is that the world is seeing a huge movement away from one destination spending investments, and therefore this is an opportunity, and large number of leading companies of the world, and I can name a whole lot of them on electronic, mobile, semiconductor, chip, solar. All the top companies of the world are exposed to an extent of close to about 85 to 90% in one country. 85 to 90% in one country means if tomorrow there's a China-Taiwan crisis, what happens? The whole world will come to a standstill. Whole world will come to a standstill. And therefore, I think some of you should read this new book by David Miller called The Chip War. And once that begins, how the world will come to a complete standstill. And therefore, it's absolutely imperative that India seizes this opportunity. All these companies are being asked by their countries to look at alternative sources. New investments, yes, but even the past investments which has taken place, many of them are looking at this opportunity. And it's an opportunity which India must seize. And this would require a huge amount of effort. It won't come easy. There are many destinations competing. And therefore, this is a challenge for India's bureaucracy. It's a challenge for India's banking system. It's a challenge for India's entrepreneurship. All of them must work together to make India the center for manufacturing. Because, many people say this, that India can grow in services. India can never grow on a sustained basis without manufacturing. India can never create those jobs without manufacturing. So that's really the key.
Yes, sir. Sir, first compliments for piloting a lot of the reforms in the country. One question which you raised about environment and social and governance risk and framework which is being kept in, the entire world is looking at the presidency of India on the thing. So this issue will be definitely, country will be looking at how India is progressing into this. So IBI is closely working, and we found a few things where we thought that the government can do something about this. There is a total lack of database for the environmental risk that is its manifestation into the economic activities and its manifestation into the social impact. So to quantify the environmental impact on the economic impact as well into the social impact, we need to create a central database. And I think there is a fragmented data somewhere. The disaster recovery department in each state are working on it, but this data is altogether fragmented. Are we thinking of creating some centralized database where the geography-wise, because climate risk is linked to the individual geographies, geography-wise database can be created and the Indian own taxonomy can be created for addressing these issues?
A very, very, very important question. First of all, on the taxonomies part, I think the finance ministry is doing a lot of work and they'll have an Indian taxonomy very soon. But important point to my mind, from the question that you raised is, see, it's not that there are large pools of money available. The world is not short of money. There's a lot of institutional finance available in the world. And actually, a lot of that money wants to get into climate change areas. What is the challenge right now is that a lot of we are not able to track which corporates are carbonizing, which corporates are decarbonizing, which corporates are polluting the world. So what you need is there's a lot of data available that you need some great entrepreneurship to be able to use that data, clean that data, and say that this is how corporates are polluting the world. And then you need another agency like Moody's, which is doing the credit rating of countries, to do credit rating of corporates. And then you need banks like SBI to only finance those who are actually decarbonizing the world and not carbonizing the world. And this is going to happen. In the next 2 to 3 years, you will have data being cleaned up. Every corporate will be graded, ranked, and actually credit rated based on the carbonizing they are going to do. And therefore, this is just a matter of time. And eventually, all funds, let me tell you, all institutional funds across the world are going to flow in. It's not that funds are not available. We are talking about government, country funds, but private pools. When I talk about credit enhancement, when I talk about blended finance, and when I say IMF and World Bank should do that, is that vast pool of institutional funds is not being utilized for this. And that is not being utilized because we've not been able to do a credit rating of corporates.
Last question, please. Yeah.
Good evening. First of all, I compliment you for your energy, and I second what Mr. Khara said about your energy and enthusiasm. The second point that you said, that the rating for ESG, the environment rating, it is already happening in India, and even my company is doing it, and most of the institutional investors are using it, and SEBI has mandated that mutual fund should do it. That is one. The second part is this.
I was talking at a global level. I was talking in the context that actually globally we need to do it in a far more and put it out in public domain, name and shame these companies.
Yeah, I am coming to that. The other issue is this, that today when we say emphasis on ESG, so I say that environment is only the medium because ultimate focus is society. Because I don't like trees or water or sea, because ultimately I want to save the human beings. That's why my emphasis is on this. Now, you made a very important point. All throughout like 40, 60, 100 years, this carbon dioxide or the greenhouse gas that is emitted has committed, most have come from the developed country. And now today the situation is, those developed countries have outsourced all the manufacturing to countries like India and China. So today we are the biggest emitter country in the world, China, Indonesia, India. Now the point is this, what we manufacture, the emission is happening in my country, ultimately it will impact the entire world. But I am being blamed, whereas the consumer is sitting in somewhere in US or something. So till such time, it is the consumer who pay for the pollution. Think come, probably we will be having a very difficult journey.
So, the proposition that you're making for consumer to pay is a very, very long-term process. I am a believer that we have not polluted the world. We have not. We've contributed only 52 gigatons out of 95% has been occupied by the developed world. We've taken only 1.5%, we've not. But yet, we must become the first country in the world to industrialize without carbonizing.
Yes, that's right.
We must become, that's the challenge we must take on. We should set this model for the rest of the world that we will be the country which will industrialize without carbonizing. And technology has made that possible. If you do not do this, you will never be able to attract valuation, never be able to attract capital, you will never be able to grow, you will never be able to technologically leapfrog. And that is what India needs.
That's true. I agree. Thank you. Yeah, you also.
Namaskar, sir. Sir, many state governments like Punjab and all, they are giving free electricity, free water, free medical facilities. But ultimately somebody has to pay. They are not compensating to distribution companies, so their book balance is going down. and ultimately banks are affected. But their logic is that this is required for upliftment of the poor people. What is your view, its effect on the development and economics of the country, sir?
No, I'm totally against freebies other than on education and health. I'm totally against free electricity. We'll ruin this country if we go around doing this. And that is why the discoms are in such a bad shape. If you are not able to, how will electricity come in? How will it reach poor people? So all these discoms will go bust after some time. They will not be able to support new renewable energy. We'll never be able to go green. I'm totally against any of this kind of... People must learn, and people are willing to pay. I went to Nagpur, to the slum area. People, all the women I met, they were not getting water. There was a private-public partnership water which came in. And without water, these children were suffering. There was diarrhea, there was TB, there was this, unhygienic things, all dirt and filth. Water came in. These ladies told me that we are willing to pay any amount for water. 24/7 water supply they got. They said, I said, अब आपको payment करना पड़ रहा है, बड़ी दिक्कत हो रही है. कहा साहब हम इसका दुगना देने को तैयार हैं. तो people want to pay. It's not the citizens of the country. People want good services, they want to pay. It's some politicians who are ruining these habits and they are destroying the country in the long run.
So thank you very much. I think the way we have assumed this G20 presidency and the kind of track record which we have demonstrated to the world at large in terms of the reforms which we have seen in the last 7 years, it's actually paved the way for many good fortunes for many of the participant countries, particularly from the emerging market economies. So with this note, I would like to thank you very much, sir, for enlightening us with your thoughts and look forward for your guidance. Thank you.
Thank you, Mr. Kant, and
Thanks a lot.
Thank you, Mr. Kant, and thank you, Mr. Khara. I request you to please stay on for just a minute so that Mr. Khara can hand over the memento and the green certificate, and also for some pictures. All right, so ladies and gentlemen, our next session today is one that I'm sure a lot of us would like to listen to. This one is going to be a switch away from the more mainstream business, banking, and economy that we have been talking about. We're going to move a little bit away from that and talk about the motivation and inspiration behind it all, what it really takes to, give yourself that kind of inspiration to get to these positions of leadership. So Gaur Gopal Das is an international motivational speaker. He has appeared at various social and corporate events the world over, and he has a massive presence on social media as well, as I'm sure you're all aware. Now, before we begin, I do want to, quickly alert our audience that the content of all talks presented by Mr. Das, including all audio and video recordings, are his copyright, and they should not be circulated in any format. But that said, let me please invite on stage well-known motivational speaker, Mr. Gaur Gopal Das.
So very good evening to you, ladies and gentlemen. Oh, it doesn't look like you're very happy seeing me. A very good evening to you, ladies and gentlemen. We can do a little better, guys. A very good evening to you, ladies and gentlemen. It's a great privilege, pleasure, and honor to be here this evening, and I want to thank Mr. Dar. And of course, I wanted to come and be a part of when you were speaking, but I was just fearful of